Well, good morning, Bob.
Good morning, Bill.
This is FNC's Morning View. I'm Bill Rayburn here with Bob Dorsey, and today we're talking about the federal government, mortgage rates, and what we're going to do about housing.
Well, there was an editorial in this weekend in the New York Times that basically said one of the biggest failures of the Obama administration so far has been its inability to deal with all of the foreclosures.
Are we going back to the white paper on what to do with Fannie and Freddie?
Yeah, well, that's part of it. I mean, basically, Freddie and Fannie are in a situation right now where the head of the FHFA, DeMarco, has been opposing a lot of the write-downs and a lot of the restructuring that some people feel are necessary to make this market turn around.
So let's talk about some of the possible solutions. We've got people that are underwater, and so we talk about a write-down. If we just take the balance, the outstanding balance, let's say that you owed $400,000 and your house was worth $300,000.
Right.
So let's just write it down $100,000.
Yeah, but then somebody has to absorb that loss.
Well,
right?
okay, but the homeowner loves it.
Homeowner maybe, well, yeah, I mean, they'll love the fact that they write down.
The politicians love it. The politicians love it because if you write your mortgage down, everybody stays in their house. It's all good.
Depends on who pays for it.
Well, okay, now, but let's talk about who would have to eat that in that scenario.
Well, the banks would have to eat it,
and the
their
bank shareholders.
Yeah, or the government would have to come up with money to do that, to help the banks out.
So one way is for the government to allow Fannie and Freddie, since they hold most of the mortgages, to just write that down and absorb that loss, and you and I get to pay for it.
Exactly.
Are you in favor of that?
Well, there's this issue of the deficit that everybody's wringing their hands about.
Is that a figment of our imagination, or is it?
It's not that big of a deal. The deficit isn't. I mean,
we're just spending more than we're taking in, right?
But I mean,
do you ever do that?
Honestly, I've never done that. I hear some people do that. But we're in a country that fortunately has its own currency. So
that means a printing press.
We have a printing press.
So just crank it up.
If we wanted to pay off the debt, all we do is just crank it up and pay it off.
Inflate it, just inflate it, and away we go. I mean, you would think if you crank it up, it'd inflate it.
Only if there's a lot of demand, and there isn't a lot of demand right now.
So let's just flood the market. That's what the Fed's essentially done. Let's flood the market.
And how much has interest rates gone up?
They've gone down.
Exactly.
And let's talk about this fiscal cliff. Everybody wants to call it the physical cliff, but it's not. It's a fiscal cliff. Is it really a cliff or not?
Well, some people are calling it the austerity bomb.
Is it just a ledge?
It's nothing. Okay, it is a situation where we have some predefined changes to the budget that are going to kick in unless they figure out a way to do it, overcome it.
And so it would seem to me if we, shall we say, go over the cliff, that would be good for bonds.
I would think so, yeah. I mean, basically, what's going to happen is that tax rates are going to go up marginally.
Bonds go up.
Right. There's going to be if bonds go up, then interest rates go down, right?
Mortgage rates are lower.
Right. There is going to be decreased spending, and that's what was funny. There was an article an editorial in the Wall Street Journal today. I know you don't think I ever read the Wall Street Journal.
I'm impressed.
Anyway, it was a...
You didn't quote a second, though. You quoted the New York Times first.
Editorial, well, here's the reason. The editorial today said, if we let this happen, it's going to be terrible. Government spending is going to go down, and there's going to be massive increase in unemployment. Now, it's funny. The same editorial people were saying that if you increase government spending, it would have no impact on employment. But if you decrease government spending,
big layoffs.
Big layoffs.
Okay. That's an economist writing that article, isn't it?
I think
unbalanced.
Anyway,
go ahead.
But right now we have about 3 million people who are in or near foreclosure.
So they're seriously delinquent,
right?
Or it has gone to non-accrual, or it's actually in a foreclosure status.
Right. We have about 5 million who have high rates but can't refi. In my opinion, that's where we could, not necessarily underwater.
Okay, but a big proportion of them have to be underwater, or their credit has deteriorated.
Or they're a jumbo.
Could be a jumbo,
right.
and so So they might be, they just couldn't refinance.
Right. And they can't refinance it. I'll tell you, in my opinion, that's where we can have a big impact right away.
Just write it down?
Don't even write it down. Just allow them to refi.
Well, do you think they have sufficient equity?
Some do, some don't, but, if they're stuck paying a high interest rate, everybody's better off, except the bank, I guess, in terms of their income, by just simply allowing them to refi.
Well, if you have no intention to repay, the interest rate you
but
pay is irrelevant.
a lot of times they're paying it. They're paying it at a high rate. They would like to refi, but just not able to.
So if they got to refi, would they spend that money?
I bet they would. Yeah,
so consumption ought to go up.
Right.
That'd be good.
Right. Right now, there are about 12 million loans that collectively are about $600 billion underwater.
That's a big number.
That's a large number, yeah. So how do you fix that? Well,
not as big as the deficit.
That's true. Not even close.
But still a big number.
$600 billion, yeah.
So what's $600 billion?
I know.
You think we should just write them down?
I'm not real sure the right thing to do. I think it has to be a combination. Maybe not everybody takes the loss. The banks take some of the loss. The government takes some of the loss. But everybody's going to be better off if we can get the housing market back into shape.
And so it gets supply and demand back in balance. In fact, demand may outstrip supply if we do that, because the people that are underwater that are trying to sell their house probably take their house off the market.
Right.
As long as they have employment.
Yeah. And, let this market start coming back, because in past recessions, the thing that has always brought us out of recession is the housing market.
Right.
Okay, but this year it can't. It's still way behind.
More
it's
about
still structured, yeah. So we
That's
got to fix it.
That's a big word. Well, we have to, if we're going to depend on Washington to correct it, we're going to have to wait a while.
Yeah, I think we'll have to wait a long time.
Because they're having trouble getting a budget, let alone correcting housing.
Right.
And so, having said all that, what would you recommend Congress to do?
In terms of the budget, or
No.
in terms of the mortgage?
The budget is way beyond the scope of this discussion. We need to talk about the housing market.
Okay, well, if it were up to me, I would ask the FHFA, first of all, to get a new director. And then have this new director allow the conforming loan limits to be expanded to cover jumbos. Also to relax some of the constraints on the underwriting so that they can have a lot of people who are paying their mortgages, who are up to date on those, and can't refi for some technical reason, to refi into a lower interest loan so that they can better afford it and take less chance of actually defaulting.
Regardless of principal balance?
Regardless of principal balance.
But you would not be in favor of a principal write-down.
I haven't finished.
Oh, sorry.
So the next thing I would do is to work out some kind of a deal where there's some incentives for the banks to actually lower the principal.
So that would give you some credits on some servicing or something of that nature.
Right, and some of the stuff that Freddie and Fannie own, they're going to have to just work out a process where they make some partial reductions so that maybe they're not as far underwater. So a combination of those things, I think, would go a long way to revitalizing the housing market.
Taking those losses and doing that sooner rather than later is good?
Yes.
Almost always, a banker lives by the maxim, the first loss is the best loss.
Right.
And so what you're forecasting, not forecasting, what you're recommending is, you're recommending that we have this combination to stabilize our markets.
Right.
Well, we're out of time. We hope you have a stable week. Today is Monday, and this is FNC's Morning View. I'm Bill Rayburn with Bob Dorsey. You all have a fantastic week.